So a very good evening to all our mentorship traders. This is the Friday evening, 9 p.m. Indian Standard Time. We are on the 26th of February 2021. An eventful day for the markets, and we have the end of the week, end of the month. So a little bit more to talk about the index and the other sectoral indices in this Mentorship Invest session. I welcome all the new joinees who have joined over the last week. So let's talk about what happened with the Nifty and how is it looking going ahead. This is the Nifty futures monthly charts. I'm doing a top-down approach, the larger time frame first. We have a pretty neat rising channel over here, which I've drawn using the concept of RSI, the lows of Feb and March. This is Feb 2016 and this is March 20. Surprisingly, the upper border of this channel is being respected well by the index, and on a monthly closing basis, the index is right up there. This is the monthly chart. Strong uptrend, nice bull market. Should not be a sign of worry going ahead, looking at the long-term charts as of now. Jan and Feb, in both the months, we have seen the index slipping significantly from the highest point of the month. You can call this a shooting star. This is, of course, not a shooting star in the Japanese candlestick parlance, but very clearly the upper border, upper shadow is fairly significant. So the index faces supply or selling as it hits newer highs. The weekly charts are pretty clean. We had this couple of channel breakouts. Then the market took off. Then it had made two higher highs. We've got a negative divergence on the RSI 9 up here, but these kind of divergences don't lead to a significant sell-off. Nevertheless, on the weekly charts, the trend is strong, and yes, it looks like due for a short-term or a little medium-term correction. If that happens, then we have this channel upper borders close to that 13,400, 500 levels to act as support. Now, this is from a medium-term perspective. The damage happened today, and we did see the index sell off quite a bit. This is the daily chart, and pretty long red candle towards the lowest point. The index closed, and this was not just a big 500 points cut, 3.5% fall for the index, but the recent oscillation, the recent yo-yo, the recent swing of the prices up and down, and all the drama that happened this week is quite disturbing, because a trader would always want a steady trending market up or down, which always makes trading a little more easier. But this is volatile. In terms of levels, the index is back to the highs of mid-Jan, from where we saw a bounce back few days back. Now that low has been broken, and it's close to this rising channel also. Now the levels is around 14,470. Let's say talk about 14,500. Further down below, we have the lows of end Jan, which confluences with the highs of mid-December. This is around the levels of 13,700, 13,800, 900. And further down, we have the lows of December and the highs of November, which confluences. This is around 13,100, 13,200, 300. So these levels are far-fetched, but I've kept them because these levels have proven themselves in the past. Important thing would be, do we get a breakdown of this channel like this or not going ahead? In that case, we have a two-legged correction, 1, 2, or you can call this a three-legged correction if you want. Elliott wave principles will call it ABC. And so we might be looking at levels sub 14,000 for sure. One thing is quite clear, that it's volatile, that it's uncertain, that it's little difficult to catch the trend by its tail. So I would definitely request and suggest, as I've been writing in our daily write-ups, that stay as light as possible, trade cautiously, do not add up too much long positions aggressively, because of the fact that the trend has been quite volatile. Now, this is a 75-minute chart of Nifty futures, we can see down here the RSI moving into the red zone, then bouncing very sharply to the green zone, and then again crashing down to the red zone. This clearly suggests the kind of volatility that the index has faced. Huge volumes happening at 15,000, 15,100, 150. This is the volume profile between this run up. We have a gap here. If you look at the short-term charts, 14,400, 14,470, and then sub 14,000 level. So considering the way the market sold off today and the way it has closed this week, of course, one should be a little cautious and expect 14,400, 450, 470, this gap to get tested. And even if prices just cuts through this gap and falls further down, that should not be a surprise at all. On the other hand, every bounce back may face some resistance, and the immediate resistance that the index needs to take out is this close to that 14,900 and the psychological 15,000 mark. One thing I would like to bring to your notice is if you look at the line chart in the 75-minute time frame, the first sign of a confirmed downtrend, which will imply that the market can fall further down, would be a negative hidden divergence. Would love to see prices making a lower high with the RSI going up. So every bounce back from here on or further down, what I mean that whenever the market bounces back, maybe from here or further down, whenever it bounces back, it will be very interesting to compare the falling highs of the price and compare them with the highs of RSI. That would give us some sense of whether we have some serious correction in our hands or not. As of now, there's no such sign, but the velocity at which the prices sold off, we should definitely be a little careful. Bank Nifty, if you look at the charts of Bank Nifty in similar fashion, the monthly charts, again, respecting the rising channel really well. So we have found ourselves, both the Nifty and the Bank Nifty, within a beautiful rising channel on the long-term perspective. The weekly charts have a divergence over here. If you can see the small, just zoom in, this is a small doji kind of a pattern, after which we have got some correction. And we had a beautiful big long candle. Even a 50% correction of this long candle is okay, is healthy, is good for the uptrend. Uptrends can only come, a higher high can only come after a short-term correction. So we should allow prices to correct. If we consider the kind of move that we had, a correction like this is not much at all. If the prices continue to correct down, looking at the weekly charts, then the previous swing highs, which is a little above the 32,000 mark, which coincides more or less with the highs over here of June 2019, December 2019, and Jan 21. This is 33,000 and a little below that, 32,500, 33,000. That's a pretty good level to watch for from a medium-term perspective. If we look at the daily charts, now daily charts may look a little confusing to you. Let me bring your attention to three channels. A nice rising blue channel, which I have from the lows of May 20 and September 20. This has been a beautiful channel because look at the way the highs have been held. Then we got the breakout over here in November. Then we got a test of the highs in December. Then we got another test of the highs in Jan. So this blue rising channel is too good to be true. So it holds. And for some serious correction, if at all it happens, then we will keep a very close look at this blue line. Then we bring our focus to this steep rising red channel. Now, this got broken in this sell-off, which is late Jan 21, and then we got a beautiful move. I've kept it because as it bounced back, it kind of managed to find some degree of resistance. So I've kept it, though it's pretty steep. Nevertheless, we'll see. And then we have this green channel. I've kept this green channel because it's coming close to this upper border. And then if it slips further down, then we have this blue border. And this close to this, we have this level. This is your Jan 21 highs. We spoke about this some time back, 32,000, 33,000 mark. We've got a small gap over here as well. So all in all, the markets, or if we look at the Nifty and the Bank Nifty both, I sense that it's due for a two-legged correction or a complex correction. For example, if you look at the Bank Nifty, this was one correction, this was the second correction, this was a third correction. This we can call it an ABC kind of a correction, and now we are heading for what? Yet one more ABC correction, a complex correction, or maybe a little more than that. Maybe this time will tell, but it's turned a little weak. It's turned a little weak. This weakness is healthy for the larger time frame. So you should not say that or believe that, okay, the bullishness is over and now we are heading for some serious correction. We may, but it's too early to say that. Taking a look at the behavior of the sectors from a 1 week perspective, I've opened the RRG chart under the stockcharts.com platform. I have sorted them in terms of weekly change. Metals, big move this week, a big gainer. So let me not change the tails right now. Let's keep it this way. Just to take a look at metals being the biggest gainer, then some public sector stocks and some commodity stocks. Small caps, mid caps did pretty well, but then they sold off from the week's high, like most of the stocks did. On the downside, it's IT, which is underperforming. Consumption, auto, pharma, media. So we've got some decent weakness coming in. Nifty, Bank Nifty, most of the banking stocks sold off pretty sharp. Now, increasing the tail of these RRG charts to, let's say, 3 months, around 12 weeks. And if we sort in terms of tail, we find that the PSU banks, the real estate, the small caps, the auto are all in the leading quadrant. So they're still doing good and we can look to buy them on dips. The improving ones are your energy, primarily led by Reliance this week, PAC, CPSC, infrastructure also doing good. So this list, if we believe or we sense that the market's giving us a short-term healthy correction for a larger move ahead on the upside and we will look to buy on the dip, then focus in this space. We can definitely focus on metals also, but I think it's a little stretched. Bank Nifty, private banks, definitely it's come under the weakening, but as I have shared over and over again, once the RRG chart shifts to the weakening, ultimately they will go to lagging, then improving and leading. This is the natural flow, but always it doesn't happen in one go. It can do like this, and it may move accordingly. But when it comes to weakening, we should be a little careful, which means that going ahead, the incremental upsides may not be very large. The incremental upsides, we may get some upsides, but they may not be very large. Little disappointing looking at the FMCG and the consumer. We've been looking at it for quite some time. And we noticed that over the last 3 months from the lagging, it went on to the improving quadrant, right? And we've been hopeful that because it has moved to the improving quadrant, it should lead going forward. But that's not come yet. This movement of momentum had dragged it down. Eventually, they'll pick up and then move to the leading quadrant. So we continue to keep a close watch on stocks like ITC, Hindustan Lever, the consumption, and the FMCG space. But as of now, it is still underperforming. I would say, considering the way the markets are right now, stay light. If you are a directional trader, especially in the derivatives market, stay as light as possible because of the volatility. It has been a surprise move that we saw later in the afternoon yesterday, and the sell-off that we have today in our hands. So wait and watch a little bit and go with relatively stronger stocks. Look to buy on the dip, especially when they hit some strong supports. Okay, that's it for the views on the index. We'll move ahead now and talk about few investment ideas.